What is going on, guys? Welcome back to a new video. In this video, you guys saw the title. We are going to go over how I am going, or how I have came up with this and how I've started implementing a new portfolio that's in my personal name, a new portfolio that I'm doing that has both income, because everybody knows I love income, and how to get the growth out of it at the same time while not necessarily investing in dividend growth stocks. And I'm going to explain what I've done here and how I'm going to do it. So we're going to go through this portfolio backtester here, and I'm going to show you the couple of funds that I'm actually going to use. And the one thing we are going to need is dividend history. So if you guys don't know, this is realty income. If you guys ever want to go figure out how to get to the thing, come in here and you are going to go over to the left hand side. Oh, it's already up. Never mind. I'm sorry. So this is going to show you what their dividend is every month. You guys can see it's went up basically here at the end of this year. Great company. So that's not the only thing that we're going to do here. So I think this is an important thing, how I'm going to backtest my portfolio. So 10,000 is fine. You can start with 1,000, do whatever you want to do. I guess we'll start with 1,000 because that's what most people have. And then we want cash flows because we want to be contributing just like you would do a 401k. And I'm actually going to go up here, click yes to included year to date. Contribute fixed amounts is I'm going to put in, we're going to do $700 because that is now the new national average car payment. I used to do $500 a month, but if you can afford a car payment, you can also afford to get that. If you can't afford to buy $700 worth of stocks and buy $700 worth of a car every month, well, then maybe you need to get less of a car. That way you can invest more. Just saying. So with that being said, I don't care about this. Contribution, we want monthly because that's what we're going to do. I'm not going to rebalance at all, guys. You're going to see what I'm going to do. Leverage type, there is none. Reinvest dividends, yes. Display income, yes, because again, we want to have high income. That's what we're looking for. Factor regression, no, we don't care about that. The benchmark, it's not really going to matter in here because I'm going to show you why. So we are going to make custom here. So I'm going to show you a couple of them. So we compare everything to SPY, the S&P 500. So we're going to put SPY in here, and on portfolio, that's going to be 100%. So the other one I want to do is we are just going to pick a stock that you guys might want, or I'm going to compare the two actually. So what I'm going to do is I'm going to do PTY because you guys know I absolutely love this ticker. It's going to deal with corporate income and financials and stuff like that. Basically, very, very low risk stock that's going to pay out every single month. This one's actually wrong on its dividend. It does not pay out 13 cents. If you look back here on this, it pays out 11.99 cents, I think, 0.1199, something like that. So it's not quite 12 cents, but basically I look at it as 11 cents. I round down so I get a better look at it. But again, this is PTY. If you want to know more what they do here, pause the video, read this section. It's exactly what they do. But if you look in the past, PIMCO is a great fund to have. So portfolio 3. Now this is where the fun is going to start because I'm going to name this my mix. Actually, we're going to name it income growth fund because we're going to hit all three sectors here. We're going to have some of the majority, and we're just going to go through tickers here so that you see what we are doing. In portfolio 2, I'm actually going to have 80% of PTY. Now you're going to see why I'm doing this here. I'm going to add O, which is what we looked up earlier, is going to pay me monthly on dividends here. I'm going to add 10%. So what I'm doing here is I'm taking 80% of my portfolio for income still, to continue that dividend snowball and to generate more income every single month. Then I'm coming over here. You guys know, you guys have heard the numbers. Real estate makes like the second or third most millionaires every single year. I'm not saying that you're going to become a millionaire off of this, but I do think that you should have some real estate exposure. It's great for cash flow as well. Obviously known for its monthly dividends. Now you can go with some stocks that have quarterly dividends. I have no problem with that. I like I've done a lot of vetting through them. They actually just took over a casino. They just bought another casino. Again, they don't do in the gaming operations. They just own the real estate. Triple net leases. So if you don't know what a triple net lease is, it is basically they own the building and everything, and then they never have to maintain it. Their clients or the people that are actually using it, like Walmarts and stuff, take care of all that, the roofs, everything, and then they just do the rest of it. So, and they pay their bill every single month. They allows them to sell the building for money and continue to grow. That's basically what they do. So we have PTY, we have O, and then the other one here is something that I don't see a lot of people do. You can choose a couple of tickers here. Me, and I'm going to explain why I'm doing this one. I'm going to do TQQQ. So this is a leveraged fund, and I'm aware of this, and I'm actually okay with it. And guys, you guys can change these numbers right here. Again, I said 80% is going to be income, 10% is going to be real estate here, and then 10% is going to have the overall market basically. Now, when I say you can do a different one here, you can actually do what's, I think it is UPRO, yes, which is the S&P 500 leveraged fund. Or you can do TQQQ, which means you're going long on the Qs, which is also basically the ETF for the NASDAQ. Why I'm doing this is I want to have exposure to that growth and to those tech stocks and stuff like that, but I don't really want very much risk from it. So I'm willing to invest into it to get that growth out of it at a very small portion, but I want to continue to be able to get my monthly income from PTY and O. But if you look, and this is something why I had it up here, TQQQ, over this now, it's not doing well, right? This year to date, nobody's doing well. You're down 72%. Why? Well, because this is leveraged. But if you look at it overall, it's absolutely been insane. Because you get these from $20 to $82 in less than 5 years, guys. That's insane. It's because it is a leveraged. Do some more research on this before you just jump in here. This is the max, shows it to you here. Again, do some more research on it. Make sure you know what you're doing here. There are other leverage ETFs. Like I said, you can go to UPRO, which is the S&P 500. Why I'm going to choose TQQQ here is because the S&P 500, if you guys have ever looked at it, which is SPX, and there's nothing problem with these. That's not what I wanted. Either way, we're just going to go here, SPY, which is the S&P 500. And if you go down to the holdings, well, it's going to hold basically the same companies. I mean, look, Apple, Microsoft, Tesla, those are tech companies. Google, those are all tech companies, guys. And it's the same thing as TQQQ, except for TQQQ is leveraged. So that's why I have those there. And that's why I chose TQQQ. Now we're going to hit Analyze Portfolio. It's going to send this thing down here, and we're going to look. And you can see, obviously, here, the one thing I want you guys to notice here, the income growth stays right. It's actually over SPY, which I absolutely love overall. But PTY would stay just about the same. You guys got to remember that is the majority of your portfolio here. And again, you can mix it up between PTY, PDOs, or maybe some other ones that you find for monthly income or quarterly income, whatever you really want. I like the monthly income. My bills come monthly. I don't know about you guys. But this is what's going to show you guys here. And you're going to get, obviously, some pretty good income here coming from it. But the biggest thing that I think you guys got to look at here is the overall here. This is something that I don't think enough people look at is SPY, 239,000. Now, PTY by itself, obviously, is lacking, and that's why we're only putting it at 80%. Maybe you want to do 75%. I don't care. That's up to you guys. I know me, I want 80% in income because, again, you're always going to need income. I don't want to have to ever sell shares. That's my thing. So, income growth, though, with all three of the funds, you're getting dividends from O and PTY, and then you're getting the insane growth of TQQQ, obviously, which is a leveraged fund and does insane in order to provide these. You're just going to continue to make more and more money. And the thing that you can do here in this portfolio that it's not showing for more cash flow down here is instead of just having those there for it, is you can also take it, and if you get enough shares of TQQQ, and I know this because I have done it before with TQQQ and UPRO, is you can sell their options. So what you're doing is a covered call. So $23, basically, if you have $2,300, or let's round up, $2,400, you can do a covered call on this, and you actually do very, very well on the covered call. Cash flow wise, if you're going a month out, you're going to get about $25 to $30 a month, depending on it. Well, if you want to go a little bit further, I know you can get 50. You can get more depending on how you want to go in that covered call and where your risk levels are at. I know I was cashing in about $47 a month is what my average came out to when I was doing that for quite a while. But again, market's down, and I'm not 100% for sure on how much further the market's going to go down. So what do? I have came up with this idea of, instead of doing what everybody else is doing, I'm going to still focus on my income. I'm going to continue to invest, but I'm also going to invest into the two other things. I want to have exposure to real estate, because I do think that you should have exposure to real estate. I have exposure to financials, which are paying me monthly with PTY. And then I want the tech side of it and the growth side of it, the apples, all that, because of course you can make a lot of money with that, but I'm not betting my whole 401k or whatever investment account you guys have on that. That's something I think a lot more people should put into perspective. If you guys ever sit down with a money manager, every time I go to the bank, they want to talk to me and see if they can bring money into their thing where that they can manage my money and get a better return for me. Ask them, would you invest into SPY and Apple at the same time? Because they're going to ask about the S&P 500. Tell them, yeah, that's fine, no problem. But ask them about stocks like Apple or a Microsoft or a Tesla. Are they investing in those as well? And if they say yes, ask them how that's diversifying. Because if you look at SPY and see how much the holdings are, those are all in the top 10 holdings of SPY in the S&P 500. You're double exposed. Know your stuff, guys. I think it's very, very valuable, and I hope somebody found something important from this, or caught on to something, or maybe generated an idea. I just want to help people out here, and I will see you guys in the next video.